Hey guys! Today we'll be taking a look at an extremely profitable day trading strategy. This strategy works perfectly with Forex, crypto, stocks, gold, and so on. I personally like to use it for Bitcoin, as it has some of the biggest price swings. So without wasting any time, let's get into it. First off, we need to set up our trading view for this strategy. The first thing that we're going to do is change the candle type to Heikin Ashi. For some context, Heikin Ashi candles are used to smoothen the chart and give a better visual on the trend of the price action. It averages the price and shows an upward momentum with green candles and a downward momentum with red candles. We're also going to be trading on the 5-minute time frame. Now the only indicators that we'll be using for this strategy are 2 moving average exponentials. Set the length of the first EMA to 9. Then set the length of the second EMA to 18. I like to change the style settings to my liking and also make the lines more visible on the chart. Now the rules for this strategy are: for a long position, we're going to be looking for the 9-period EMA to cross over the 18-period EMA. Next, we wanted to see the price pull back into either the 9-period EMA or even the 18-period EMA. We're going to open up a long position on the first bullish candle close, set the stop loss just a little over the previous lows, and target a 2-to-1 risk-to-reward ratio. For a short position, we're going to be looking for the 9-period EMA to cross under the 18-period EMA. Next, we're gonna wait for a pullback to the EMA lines. After the first bearish candle close, we're going to open a short position. We're going to set our stop loss a bit over the previous highs and target a 2-to-1 risk-to-reward ratio. Now there's a very important rule to this strategy. We are only going to trade any EMA cross once. At this example, we see that we had a long setup. Now the moving averages are still set up for a long, and we see a pullback into the EMA lines. This is a trade that we should skip. Only take one trade after any EMA cross. Let's look at a few more trading scenarios to understand this strategy a bit better. Here we see the EMA crossing down. We see some bearish momentum and a pullback to the EMA lines. Now notice that even though the candles went over the moving averages, the lines didn't cross. We can take the short trade after the next bearish candle close. Set our stop loss over the previous high and target a 2-to-1 risk-to-reward ratio. Next, we see the EMA lines cross to the upside. We wait for a pullback and open our long position at the next bullish candle close. This trade is a loss. Next, we see the moving averages cross down, then up again into some bullish momentum. We wait for the pullback and open up a long position after the next bullish candle. Target our stop loss under the previous low and our take profit to 2-to-1 risk to reward. To give you a better sense on what you can expect trading with this strategy, I'm going to do 50 backtests and see what results this can bring us. Now after 50 trades, we had a result of 31 wins and 19 losses. This rounds up to a 62% win rate. Now we were risking 2% of our account on every trade and taking profits a 2-to-1 risk-to-reward ratio, so our gain on the account ends up at 86%. I always recommend you personally backtest every strategy on the trading pair you're going to be using. The more backtests you do, the clearer the result will be on the strategy's success rate. Thank you so much for watching. If you found this strategy interesting, please make sure to subscribe and hit the like button.